Welcome to today's market report.
European shares ended lower on Wednesday as investors locked in gains after a 5-month winning streak, with concerns over an eventual spike in inflation and the Delta variant of the coronavirus also pushing some money off the table. The Pan-European Stoxx 600 closed 0.8% lower at 452.84 points, but rose 1.4% in June, its fifth straight month of gains. The index is up 14.4% this year. Automobile stocks were the worst performers of the day, shedding 1.9%, but the sector has raced past its peers this year with a more than 25% jump. The European benchmark stood just a few points short of its biggest percentage gain in the first 6 months of a year since 1998, instead of making its best first half since only 2019 with a 13.5% rise. Healthcare stocks were the best performance in June, adding 6.7%, while expectations of recovering demand saw retail stocks outpace their peers through the quarter to June with a near 13% jump. At midsummer 2020, many investors began a switch to cheaper European equity from seemingly overhauled US indices highly concentrated in tech firms, reaping lockdown windfalls. The rotation seemed to make sense as the post-pandemic recovery broadened and the US election loomed. Any yet fresh waves of COVID-19 through the northern winter and November's clean sweep for high-speeding US Democrats bottled the performance of this trade ever since. To be fair, the Eurozone's main benchmark kept pace with Wall Street's S&P 500, both gaining about 38% in dollar terms since June 30th last year. Other measures are less flattering. Britain's FTSE 100 lagged both of those by 10% points, with UK stocks a drag on the wider European Stoxx 600. The US small cap Russell 2000 starred with gains of 62%, while the Nasdaq 100 stayed ahead of most with a jump of 43%. A year on, emboldened by vaccination and strengthening economic output and earnings growth, the case for the eastern side of the pond and its more cyclical firms and cheaper value stocks is being made once again. Goldman Sachs points out that mutual fund flows into European stocks this year have been their strongest since 2015, but inflows to all equity markets are zooming higher everywhere and the relative picture is far less clear. The main problem, according to Goldman, is not attraction of Europe to foreigners. European equity held by US investors alone has almost tripled to 28% over 20 years, and overseas investors at large hold 43%. A robust European recovery, which saw Eurozone economic sentiment rise in June to its highest reading in 21 years, might help. What's more, simmering fears of hits to tech-heavy US indices from global minimum tax agreements and rising antitrust pushbacks against the big tech speaks loudly to some rebalancing. But even here, echoes of 2020 can be detected. Fears of new COVID variants threatening another European summer tourist season are a reminder against betting on premature ends to the pandemic, and the biggest political risk in the third quarter probably resides with German federal elections in September. The re-emergence of dollar strength against the euro as the Federal Reserve leans hawkish while Europe's central banks pointedly do not is another warning shot across bows. Oil prices rose on Wednesday, heading for monthly and quarterly gains after US crude stockpiles fell for 6th straight week and an OPEC report foresaw an undersupplied market this year. The Brent crude contract for August, which expired on Wednesday, ended the session up 0.5% at $75.13 per barrel. The September contract settled at $74.62 per barrel. WTI crude settled up 0.7% at $73.47 per barrel. Gold headed for its largest monthly decline since November 2016. Spot gold added 0.2% to $1,765 per ounce. Gold futures gained 0.13% to $1,765.10 per ounce. On the FX front, the GBP/USD failed to hold to gains and tumbled toward 138 amid a stronger US dollar during the American session. However, the greenback strengthened on the back of end-of-month flows. Cable is under pressure, trading slightly above the 138 zone. The greenback remains strong with dollar-yen above 111 and the dollar index up 0.4% at the highest since April, even as US yields drop and amid mixed results in Wall Street. End-of-month flows contribute to dollar strength. Euro-dollar remains sidelined around 118.50 to 60, having dropped to the key horizontal support 118.19. before 10 DMA level of 119.05 tests the euro-dollar bias.
This is today's market news. Thanks for listening. We'll see you next time.